Today, we're diving into the story behind some of the world's most iconic drinks, brands you know, but a company you might not. Diageo. From Guinness and Johnny Walker to Smirnoff and Gordon's, Diageo's portfolio is everywhere. At celebrations, quiet nights in, and social gatherings. Their reach is global, spanning Europe, Africa, Asia, and beyond. Diageo isn't just a business, it's woven into our culture and traditions. For years, it was seen as a rock-solid investment, what experts call a defensive stock, because people still enjoy a drink, even in tough times. But recently, Diageo's share price has stumbled, leaving investors uneasy. What's behind this sudden dip? Is it a temporary setback, or a sign of deeper trouble? Today, we'll break down what's happening, why it matters, and what could come next. Whether you're an investor or just curious about the brands in your glass, this is the story of Diageo's recent rollercoaster. Let's get started. To understand Diageo's recent troubles, let's rewind a bit. After the pandemic hit, people splurged on premium drinks at home, and Diageo's share price soared. But as the world reopened and the cost of living rose, spending on treats like premium spirits started to drop. The real shock came in November 2023, when Diageo warned of weaker sales, especially in Latin America and the Caribbean, once a star region. This surprise announcement sent the share price tumbling, wiping billions off the company's value. Investors were rattled. Was this a one-off or a sign of bigger issues? The uncertainty has kept the share price down, as everyone waits to see if Diageo can bounce back. Imagine thinking your car is reliable, then suddenly a warning light flashes. Confidence is shaken. That's what happened with Diageo. Now, the big question. Is this just a bump in the road or something more serious? Investors are watching closely for answers. The company's next moves will be crucial. Let's dig deeper into what went wrong. So, what caused the drop? In Latin America, Diageo's distributors overstocked, expecting post-pandemic demand to last. But as economic pressures hit, consumers cut back, leaving warehouses full and new orders on pause. This sudden halt in sales shocked investors. Meanwhile, in North America, growth slowed and competition intensified, with new brands and ready-to-drink cocktails crowding the shelves. Diageo may have been slow to react to these fast-changing trends. The result, a double whammy of excess stock in one region and sluggish growth in another. That's why confidence in Diageo's short-term prospects took a hit. But is there hope for recovery? There's good news. North America, especially the US, remains Diageo's powerhouse. Americans still crave premium spirits, with tequila and high-end whiskey leading the charge. Diageo's Don Julio and Casamigos tequilas are cultural icons, driving strong profits. As long as these brands stay hot, they provide a solid foundation for the company. The US economy has held up better than expected, so consumers still have money for little luxuries. Diageo is investing in marketing and innovation to keep its brands relevant. If the US market stays strong, it can help offset troubles elsewhere. The hope: Latin America's issues are temporary, while North America keeps the company on track. Continued success with brands like Crown Royal and Don Julio could reassure investors. The American market is key to Diageo's recovery story. Diageo's future also depends on growth in emerging markets, especially Asia and Africa. Rising middle classes in these regions are eager for premium brands, owning a bottle of Johnny Walker is a status symbol. In India, Diageo's stake in United Spirits gives it a huge advantage in a whiskey-loving nation. Even a small slice of India's market could mean massive sales. Africa, too, is full of potential, with Guinness already a staple in countries like Nigeria. As economies grow, demand for international spirits rises, and Diageo is ready to meet it. These markets come with risks, political instability and shifting regulations, but the long-term rewards are huge. By investing now, Diageo is building loyalty for the future. This global expansion is why many analysts remain optimistic. The company's prospects go far beyond its current setbacks. The horizon looks promising if Diageo plays its cards right. At the heart of Diageo's strategy is premiumization, getting us to trade up to pricier, higher quality drinks. For years, this worked brilliantly, with social media fueling a culture of connoisseurship and aspiration. But with rising living costs, will people keep splurging on luxury spirits? There's a risk consumers will trade down to cheaper brands or supermarket alternatives, which could hurt profits. On the flip side, some experts say premium spirits are an affordable indulgence people won't easily give up. Diageo's challenge: convince us their brands are worth the extra spend, even in tough times. The company's recovery depends on how this premium puzzle plays out. Will we keep reaching for the top shelf, or settle for less? The answer will shape Diageo's future. Diageo's path to recovery isn't without obstacles. A global recession could hit sales of premium spirits hard. Regulatory risks loom too. Higher taxes or stricter advertising rules could squeeze profits. Consumer tastes are shifting, with more interest in low and no alcohol drinks. Diageo is investing in these trends, but they're still a small part of the business. Operational risks, like supply chain disruptions or climate impacts on crops, are ever present. The new CEO, Deborah Crew, must steer the company through these challenges. Success will depend on anticipating and managing these risks. Investors are watching closely. Diageo faces fierce competition, not just from giants like Pernod Ricard, but from thousands of craft producers and celebrity brands. These rivals are nimble, innovative, and often have compelling stories that attract consumers. Diageo must keep its brands fresh and desirable, investing in marketing and launching new products to stay ahead. Ready-to-drink cocktails, new flavors, and clever packaging are all part of the strategy. The company's strength lies in making global brands feel personal and relevant. To stay on top, Diageo must out-innovate and outmarket the competition. The battle for shelf space and consumer loyalty is relentless. Only the most iconic brands will thrive. So can Diageo's share price recover in 2024? The company faces real challenges: economic uncertainty, shaken investor confidence, and changing consumer habits. But its world-class brands, strong US performance, and growth potential in emerging markets are powerful strengths. For a true recovery, investors want proof that Latin America's issues are fixed and that premiumization is holding up. Positive updates could quickly rebuild confidence. The outlook is balanced. Recovery is possible, but not guaranteed. It all depends on the global economy and flawless execution by Diageo's leadership. For investors, it's a choice between focusing on recent setbacks or believing in the company's long-term strength. The journey back may be gradual, but many believe Diageo will find its footing again. For now, all eyes are on the next chapter in this drinks giant story.